In this segment, we are going to look at the adjustments for accrued expenses and revenues that needed to be made at the end of every accounting period. Recall there are 4 types of adjustments. Let's now take a look at accrued expenses and accrued revenues. Accrued expenses are expenses that the company has incurred, but they have not yet recorded. For example, if ABC pays its employees $100,000 of salaries every Friday, the current year ends on a Wednesday. 3 days of the $100,000 weekly salary expense, or $47,250 worth, is an expense of 2019. The remaining portion of that week's salary expense is next year's expense. But as of December 31st of 2019, we need to record the expense so it is recorded and reported during the current accounting period. The journal entry that we will need to record will be to record a debit to the salaries expense, increasing the expense to reflect the 3 last days of the current year, bringing their salary expense to total all salary expense incurred during the year, and we are recording a liability. As of December 31st, the company has a liability to pay its employees $47,250. That liability will be paid at the next regular payday, which is not until 2020. Even though it's only in 2 days, it's still a liability as of the Wednesday of 2019. An example of an accrued revenue, or revenue that has been earned but not yet recorded, is from this Luther Lawyers. This lawyer firm had provided $31,200 of services to clients. Thus, if they provided the services, they have earned the revenues. But those revenues had not been recorded because they had not yet billed the clients. So on December 31st of 2019, an adjusting entry would need to be made to record revenues earned for which payment has not yet been received. Thus, the adjusting entry would be to credit the revenue account, recording the revenues from this client that has been earned because the services were provided, so that total revenues earned for the year are recorded. At the same time, we will record a receivable. This client owes the money to the company, so we will debit accounts receivable, increasing that asset to reflect all amounts owed to the company as of December 31st of 2019.